Hello, and good afternoon. I welcome you to today's Trading Spotlight webinar, hot topic webinar. It's Wednesday. It's the 13th of April, 2022. And today we want to dig deeper into a topic which is probably the cornerstone. Probably it's the one of the most important aspects when it comes to trading. We want to talk about trading strategies, trading with an edge, and we want to point out the differences between having a trading strategy and having a trading plan. So some of you might wonder right now, where is the difference? Isn't that the same? Well, I don't think so. And why I think this is, and what exactly I define as a trading plan, having a trading plan and having a trading strategy, and which points we have to go to or go through here when it comes to formulating your own trading strategy. This is what we want to make a topic today. So before we start, I'd like to invite you to subscribe to the YouTube channel here in the YouTube channel of Admirals. Leave a thumb up if you like what you will see now in the upcoming minutes. Also, please leave a comment below if you have any questions, if you have any topics you want to see discussed, being made a topic in the next webinars. May it be from my end, may it be together with Paul or with Marcus, please let us know. And if you have any questions now here live in the event, please feel free to ask your questions in the chat box. I already seen that there are some comments here. So good afternoon. This is the trading chat box. And yeah, let's get it started. Let's share my screen and then take it from there. So the first slide here, trading strategy versus trading plan. It's really trading 101 in my personal opinion. Before we officially start, first of all, here the broker behind this webinars, it's Admiral Markets, and an FX broker, which is, oh, by the way, there's one small mistake. It's in the industry now for 20 years, offering over 8,000 financial instruments here. May it be FX, CFD products, also physical stocks, ETFs, commodities, and so on and so forth. Global presence with support in local languages. And in addition to that, also licensed here by the CISEC in Europe, or by the FCA in the UK, or by the ASIC in Australia. There's a new regulatory body now overseeing the business. It's Jordan. All infos here around this can be found on the website. Very competitive when it comes to offering, or very competitive in terms of spread and cost of doing business in terms of trading over here in Germany. So I'm located in Berlin, Germany. We usually refer to Admirals as the DAX expert when talking about CFD brokers, and here in this context, who is probably one of the best DAX brokers. Usually Admirals is minimum among the top three, if not the top one here in this context, having very tight spreads in this context, very reliable platform stability, very fast order execution. So definitely worth here a deeper look. So check out admiralmarkets.com for further information. When you head over to the website, you will come across this website banner, the Admirals Trade Days, which means you have the chance of qualifying for a cashback in terms of the costs of doing business, in terms of spread and commissions, up to 3,000 euro. What you have to do for this, check out the website for further details. And well, we're one broker. So in this context here is the regulatory entities, again, admiralmarkets.com, where you can find all further information. But today's topic is mainly here the differences between a trading plan and the trading strategy. So these are the two main bullet points. First of all, what is a trading plan? But also in the next step, what we want to go through is how to formulate a trading strategy. And therefore, I want to present to you a trading strategy bulletin. In fact, you can screenshot it and then answer the questions here for yourself and take this as a starting point here to start your career in trading, or reformulate your trading strategy, probably tweak it a little. At the end of the webinar, I want to present you a profitable trading strategy for your trading. Will be on gold, and this will serve as an example here how to see how this going through the questions and this trading strategy bulletin works in the real world, to just have a clear idea on how this works in the real world then. And so let's start with, first of all, the trading plan. And here, the main difference pointed out in the first spot, I can already say I'm working on webinars for the next month, and we want to dig here through the main differences between amateur traders and professional traders. And one of these, I can already tell you this now, will be that the professional follows a so-called trading plan. And as I pointed out already at the beginning, the trading plan is not a trading system. So when we talk about trading systems, then we usually refer to a system in terms of we have a clear idea, a clear description here on how we will enter and exit trades, how my risk and money management looks like. So will be clear parameters which have to be fulfilled so that I enter a market. Let's assume we are trading the DAX. You probably have seen several other recordings here in the YouTube channel from Admirals in this context, and then probably came across a webinar which I held in the past, something like 2-3 months ago, was on the DAX. And there we, for example, had an intraday trading strategy. It was an open range breakout strategy. I said, okay, so first of all, we look at the high and the low between a certain time period, 8 till 9:05 a.m. German time in this context. And then we have a high and we have a low. Then the next step, we have to define the advantage. Are we do we have an advantage on the long side, on the short side? We say, therefore, we use an EMA, exponential moving average, 50. In this case, in terms of aggregation on a 5-minute time frame, we close above 5 minute. Well, we see the breakout on the upside. We have a long trade. We close below. We see a breakout on the downside. Out of this range we defined in the first step, we have a short trade, and then we say, okay, here is now the entry, there's the stop, high, low of the range. And let's say this is defined as 1R. Then in this context, may it be, let's say 50 points. And then I say, okay, great. I now say the risk reward is 1 to 2, which means the take profit will be set 100 points from my entry point. So this is like a system you go through step by step by step, predefined. And then in the next step, so these are the key parameters, how you enter the trade, where you place your stop, where you have to take profit. In the next step, then when it comes to risk and money management, obviously also part of the risk and of the trading system. Well, in the next step, you then have to say, okay, well, my account size, let's say it's 10,000 euros. I'm willing to take now, let's say 1% per trade. That being said, leaves us with a risk per trade of 100 euros per trade. So let's come back to the example I just mentioned. DAX, the range may be, the risk, the initial risk is 50 points. 100 euros are we willing to risk? That means 1 point can equal 2 euros in this context. Means we trade 2 DAX CFDs in this context, and then we follow this based on the position size. So long thing short, you can already consider this to be a trading system, but it's not a trading plan, because the trading plan defines, in fact, what you have to do, why, when, and how, but not only in terms of the trading system, when to enter, but also in terms of your daily routine, for example, where you clearly formulate how to perform at the highest possible level then in your daily trading. So this is already now part of my daily routine and part of the webinars, which I hold here every week. You may probably have seen recordings. Probably it's not the first time that you're now joining this webinar. And I can already tell you in 14 minutes from now, so it's 3:11 German time, 3:25 is the time when I write down some data here, which I have to then use to, in this case, not just enter the market in terms of is the stock I'm watching here, US stocks in this case, is it in play? Is it hot? Does it fulfill my criteria so that I trade it? But in addition to that, there's also the willingness from my end then at the end to work after I finish the trade. So if there's a trade, I have then to check out, well, did the trade fulfill my criteria? What did fulfill the criteria? What didn't? When it didn't, why did I still take the trade? If it fulfilled the criteria, I didn't take the trade. Why didn't I take the trade? And therefore, I have to clear data, which I collect already in the pre-market, and then which I work with, and to tweak based on the developments then after hours in this case. So this is where the real world, the real work comes into play. And this is something which I also mentioned in the past, that profitability in trading is not necessarily the trading itself. So everyone is really motivated to see a professional trader trading market opening, let's say, or trade high volatility trading event like the Fed or non-farm payrolls. But this is not where the performance comes from. But the performance results out of the work you put in before, respectively after the trade. In fact, so it's preparation and then the work after hours you put in. And this is part of the trading routine, it's part of the trading plan. And there you can see that fulfilling or following the rules in terms of your trading system is just a small fraction of the overall process of being profitable and acting as a professional. That's the same when it comes to sports. I mean, I think we can all understand, sure, you have to perform at your highest possible level when you're on the field, let's say a soccer game or whatever. But every athlete you follow on television, you might see standing on a soccer field, or who performs at the Olympics or wherever, you know that it's especially the preparation, which is important to perform at as high as possible level. And to continue to perform at this high level, there's also some after work to be done in this context, and all this is plan of the trading plan. So we can somehow say that the whole thing, the whole routine is the trading plan, and the trading system is just but still only and just a subset here of the trading plan. And so yeah, clearly, as I pointed out here in the last bullet point, a clearly and solid formulated trading plan gives you a routine which you follow without hesitation. So not just in terms of executing on your trades and automating your trading somehow. Remember the webinar from last week here on Friday, we talked about the automation in trading, but also in terms of following your routine day in and day out. So I have to really, to perform at my highest possible level, I have to fulfill certain criteria. I follow each step, and this is not just, by the way, writing down some details on what trade to write down which key aspects have to be fulfilled so that I get a trade, or that a stock is hot in my personal opinion, or personal based on my system I follow. But it's also how to get in my zone, let's say. So for example, waking up in the morning, having a coffee, for example, that might be one step. In my case, it's bringing my kids to the kindergarten. In addition to that, I also started to heal. This is, by the way, very interesting. This is a ring, a Oura ring. You probably have heard about this. It tracks my sleep and how I slept during the night. Sometimes I slept really well, sometimes I didn't. If I didn't sleep well, I write it down, and I take this into account also in my trading journal, for example, and see, okay, that could affect my trading in a negative way. So I have to perform at my highest possible level, not just to collect all necessary data to have a trade, but in addition to that, I also have to have slept well, for example. So then again, I bring my kids to the kindergarten. Great. It's not that I hurry, that I am in a hurry then to come back home, to come to the desk, but I take my time. So I go for a walk then from the kindergarten back to my home, respectively my office in this case, listen to an audiobook, for example, and really get in my zone. Then I have a cup of tea in this case, having some oversight in terms of what happened in the market, and really write together already some thoughts on, this is what I think of European markets right now, especially if I focus on US equities. This is how European markets performed. This is my bias for today. So what important news went over the wire? Do I still feel good? Did I have breakfast? And so on and so forth. And this is exactly something you might think, well, this sounds like, well, this is something which is it really necessary? I think yes, it is. And I all the time, in fact, have to smile a little when someone says, well, I want to be a trader because I think I am completely free in what I'm doing. Well, you're not. In fact, you're the complete opposite. This is probably even stricter in terms of which rules you have to follow than a 9-to-5 job. You can easily say, if you're employed, you can easily say, well, today I don't feel good, I stay at home. And there are certain laws which makes possible that you can stay at home for, let's say, also 2 days and 3 days and still get paid, and you don't need to worry. If you do this as a trader, well, you're completely out of sync with the market. You have to re-establish this connection with the market afterwards. You have to follow the action, and then you have to take small steps back into the action. If you interrupt this is the same like top performers in sports, for example. So you can easily say, well, I don't feel like working out today, and prepare for the competition, let's say next month or so. Well, you can easily do that, but the problem will be that it will weigh heavily and negatively impact your overall performance, and you have to get back on track and back in sync with your recent performance, and to be capable of performing at the highest possible level. And this is what where discipline comes into play, for example, and where you can see why following such a routine, such a plan, not just you have to formulate it, but you have to follow it rigorously and without hesitation in this case. So now let's come to the trading strategy, and let's come to the trading system, and some important questions you have to answer yourself before you have the chance to formulate a trading strategy. So first of all, the question has to be, what do I want to trade? And especially, how do I plan to trade it? 1 second, please. Okay, so no worries, no worries. Janos just joined and says sorry for being late. No worries. If you missed something, so the first 20 minutes in this case, you can find the recording afterwards, being uploaded in the YouTube channel, from Admirals. So I hope in this case that I answered this question already. David asked, what's your plan of trading, for example, morning, afternoon, evening? So I hope that you get already, even though a rough overview on how I start my day, respectively, what I plan to trade. I will probably dig a little deeper into this now, which stocks I trade, for example, why I trade stocks. That's also something which is probably of interest for you here. But I hope that you already have an idea on how I do this, respectively, that is something very individual. So if I might bring my kids to the kindergarten, someone might say, well, I don't have kids. Or my wife takes my kids to the kindergarten. Why? Because she's on her way to work, for example. And certainly I could do this, but I want to trade the market opening, so I don't have time to bring my kids to the kindergarten. In my case, so like this is a very, very individual question. Same might be true in terms of how to reach your zone. Some people might say, well, in the morning I have to smoke, I don't know, 3 cigarettes and have a strong dark coffee. Other might say, well, if I have a strong dark coffee and 3 cigarettes in the morning, I'm not capable of trading anymore, but I have to go to the hospital. So, well, instead I have to go for a walk, or I have to run around the block and have a good breakfast, but a healthy breakfast in terms of cereals and all this. So very individual question in this case. You have to answer for yourself, but this is where it all starts. So it's too often the case that people just jump right into the action without really asking themselves, hey, who am I? What? And this is, by the way, here the third question. So already a question we answer now. So what's best for me? What do I need to perform at my highest possible level? I, for myself, so like this is something I had to explain to my wife. And I had to tell her, hey, it's very important for me, for example, to go to the gym at certain times a week, for example, or bring the kids to the kindergarten. If there's some kind of interruption, I can completely it can result in me stopping trading altogether for the day, because I just don't feel in sync with myself. I know that I need this, and this is where I already have a warning sign going on, and saying, well, take a step back. If you trade at all, reduce the position size. Don't risk too much here, and mainly focus on your, let's say, A+ setups. That could also be something you want to have in the mind, then, where you can already then get to see why it's so important to write down all your trades in a trading journal, and not just write down, this was the entry that was where I got stopped, or there's where the take profit was hit. But in addition to that, why did I take the trade? What were the key parameters why I took the trade? How did I tag it in terms of which strategy did I trade? And how do I, in general, perform around this strategy? If you don't have this, you're missing a very, very important point in terms of your overall trading in general. But coming back now to here to the question, what do I want to trade and how? Why is this such an important question to answer? When I started out trading, it was clear that I wanted to trade everything. So it was like, well, it doesn't matter if I trade the DAX, if I trade equities in general, equity indices, if I trade commodities, if I trade FX, doesn't matter. I just want to trade. It's the market, and I want to trade the market. The thing is that this is not the best idea to do, because even though there's certain structures, let's put it that way, which all markets have in them, let's say, but it's not that every market is the same. So, for example, let's put it that way. Let's assume you're a risk-averse person. So, risk aversion in this case means that you don't like to take risk overnight, for example. So you're probably willing to take risk, but you're not willing to take risk overnight. And here in this context, be potentially a victim to gaps which could occur. And if you hold a position overnight, you just realize you can't sleep anymore, anymore. So you wake up in the night, you have to check the smartphone, and you just have to check quotes here overnight, and how's Asia doing, and how is it potentially affecting, I don't know, European market opening, and so on and so forth. Interruption of your sleep might result in an overall bad performance the next day if you didn't sleep well. So if you know this, if you answered the question for you in this direction, and this is the way you think about yourself, well, you probably shouldn't focus on swing positions, holding positions overnight, but focus on intraday trading. If you focus on intraday, on swing positions, then holding positions overnight, you should, first of all, don't take massive risk overnight, but probably hold only a fraction of your initial core position you built intraday the day before to hold it overnight. Respectively, you should probably, to reduce the risk of being a victim to a gap, so a different opening print to the closing price the day before, you should probably focus on assets which are traded overnight 24/7, like FX, for example, instead of stocks like US equities, which are trading here from 3:30 till 10 p.m. There is some after hours trading, there's some pre-market trading taking place already now, but the main trading hours are 3:30 German time, 3:30 p.m. German time till 10 p.m. German time, and then the market closes. So taking this into account is probably something which is of interest for you, and something where you understand why you should answer the question, who am I? By the way, and now this is now the part where I have to just here check out some stats on, okay, and this is interesting. So first of all, there is now there's in fact two stocks which are of interest for me. So the first one is Delta Airlines. You probably have seen that they released earnings. They weren't that good, to be honest. So at least at first glance, but the reaction was quite strong, and we broke about 40. In this context, it could be interesting from the long side if we can hold 40, but this is highly dependent on how the market opens now. And then there's probably another stock which is of interest, a technical play here in Nvidia. Nvidia was quite weak the last days, and is now trading around a level around 210, slightly above that, 206, 210. This is the region of the yearly lows. And I could imagine that we are probably about to see a stronger bounce against this level if we can hold above that. And that's risk reward wise. Some market participants, also given the overall strong fundamentals of the company, probably some momentum hedge funds, or I don't know, probably are willing to take risk against this level and buying. So you can already see, I thought about which stocks I want to trade. Now I wrote down what is the gap, what did we see in terms of pre-market volume. Now, that's one very interesting aspect now. While I can already see that no, not really. In fact, so Delta is fulfilling, purely technical speaking, my trade criteria. But from a fundamental perspective, it was mixed earnings. Probably some might probably argue it was not that strong, especially in the current environment, with especially oil climbing higher and thus having or weighing negatively on a company like Delta, which means like I first of all don't want to see some price action around the market opening, which is great because I'm in a webinar right now, so I can't follow the price action. And that being said, well, leaves us that I have really to see a clear signal, clear buying in this case, which needs to fulfill my overall bullish bias given the price action we have seen then. So I really want to see that the market gives a clear signal in direction of my trade hypothesis then to take a position intraday. So why is this of importance? Because it all already answers many of the questions we are focusing here in terms of a strategy for today. So what I want to do is a strategy is like an earnings play. Well, which time frame do I plan to trade? It's an intraday trade. So I want to trade purely the action of today. What do I want to trade? So I want to trade a stock in this case. This is also a question which I answered for myself. You might wonder, why are you focusing on US equities in this case? That's a decision I took around 2 years ago. Once again, so I focus, and not it wasn't a really focusing on, but it was like I had to start to focus on equities once again due to some developments in terms of taxes over here in Germany. These are political decisions. They don't have necessarily to do with me and my way of how I approach trading or how I approach risk, but it's like it's a pure business decision. It was purely this business decision in this context. That's why I focus on US equities. It might be also something which affects your decision on what you want to trade. It's not just a personal thing in terms of risk and for example, willingness, appetite for risk, respectively, aversion of risk, then taking overnight positions. But it might also be due to some political decisions which are forcing you to, this case, focusing on a certain asset class in this context. And then the last point is very important. It's how do I identify my advantage, respectively, what is my advantage? So right now, I'm very analytical in this case. So I did all the work necessary to see why this is an interesting stock for me today. So in case of Delta, it's because of the earnings release and it's because of the reaction and fulfilling certain criteria so that the stock is obviously hot in the pre-market in this case. So I have, let's say, how can I say that? This is kind of like a ratio between what's happening in the pre-market and what's happening on average in the stock. Let's say you have an average daily volume of something like 50 million shares being traded. And then in the pre-market, you see already after an earnings release that there were 2 million shares being traded. So 2 million shares in the pre-market is more than 10% of what's on average traded in the stock for the last, let's say, trading month or so. This is showing that market participants, especially institutionals, are obviously interested in the stock and are trading right now in this case. So if you then are breaking above a certain level and you see volume coming in holding this level, well, this is certainly a sign that we are probably seeing demand from institutions here in this context, which could be an first indication, an edge on the long side, then that the market, in this case, the stock, could head higher. So I know what I want to trade. I know what I want to see, that why I want to trade this in this context. And then I want to capitalize on this given certain parameters being fulfilled from the stock in terms of holding certain criteria, a certain level in this case, for example. And this being combined then leaves us with the first idea of a trading strategy. So there's certainly certain criteria which has to be fulfilled to enter a trade now. For example, I try to avoid trading once the stock is trading below the volume weighted average price. In case of a CFD, when I'm trading the DAX, for example, I try to avoid taking positions below the exponential moving average 50 in case of the DAX, or another aggregation in terms of an exponential moving average. I try to avoid long positions below and short positions above the exponential moving average, for example. This is just a rough idea on how I identify what I want to see, but you can clearly see that I know all the time on what's currently of interest for me here in this context. So some people sometimes are interested or irritated sometimes looking at my chart and seeing a white chart here, so no indicators, or at least just one or maximum two indicators, but no big lines or like a massive amount of indicators being used or something like that. And the reason for that is I just don't need this. I have certain criteria I follow, and I really try to keep it as simple as possible, and then use a combination of technical knowledge but also fundamental knowledge, volume, respectively sentiment, to combine this to formulate an edge and to take the stock, index, commodity, crypto, whatever, from there. So in the next slide, we want to now go here through the strategy bulletin here in this context, and answer the questions in terms of how to start to formulate your trading strategy. If you want to take a screenshot, I recommend taking the screenshot here and then answer the questions for yourself based on your personality, based on your character in this case. So you start out with answering the question, which market do you plan to trade? So first of all, shares, indices, commodities, FX, bonds, that might differ here. I'd say focus on one market first, and it also should all in all correspond with your personality in this case. So for example, if you're fundamentally interested, let's say, and you're very interested in terms of global macro plays, I think FX might be a first very good choice. If you very technical, in this case, working with technical analysis and all this, I'd say probably crypto might be of interest for you. So why crypto? Because you will see that crypto works extraordinarily well with technical analysis, most likely because there's lots of retail traders being here in this market, and then most technical patterns probably to some extent underlying some kind of self-fulfilling prophecy, for example. So this is the first question you should answer for yourself. The next question is also something which is of interest to you. I mean, no question about that you're mainly interested in trading CFDs here, but you probably also, some of you probably have tried trading warrants or options or futures probably. And so which product do you plan to trade? It's very interesting because some people think it doesn't matter what's the product, but at the end it's about being right on the trade. And the thing is that the product itself is a key component and makes sometimes a big difference if you're profitable or not in your trading. It could be that you're profitable trading CFDs while you're not profitable trading warrants. In Germany, there's another thing why there's a big difference between these two, because from a tax perspective, they are treated differently. This is also something which is of high importance, especially if you're trading professionally. But let's come back to a psychological aspect. What we could say is that CFDs, to some extent, are something I refer to as being an honest product. So it's a derivative. So it's not traded at a stock exchange. So it's a derivative, and it's an OTC product here. But it's a product where there is no expiration and where there is no border price level, which has to be hit, respectively broken on the upside, respectively on the downside, so that your trade has a value, let's say. So this is definitely something you should keep in mind, because now assume the following: what I just described in terms of honest, there's also dishonest products which depend on a certain amount or a certain price, which has to be broken on the upside downside. In addition, and it has a certain period of time in which this break higher, respectively lower, above and or below a certain price has to be fulfilled. This is the case when we talk about options or warrants. So this is something which is very interesting or important, especially not just interesting, but also important. Have you ever wondered how you perform under certain, let's say, market conditions, or not just market conditions, but under certain certain aspects around your product, let's say? So let's say you're a guy who says, well, I feel very stressed and get really emotional once the market does not fulfill my trade hypothesis within a certain small period of time. So I really have to get a direct feedback right away. Getting a direct feedback right away means that you could feel more and more pressure and emotions building once a certain price level is not breached, let's say, which corresponds heavily with how, in this context, options function or warrants function, which means, long thing short, it could be that you're not performing well with options. It could be that you're a really good trader, but that the product you're trading is just wrong. This is one of the reasons why CFDs are especially of interest also for beginners in the world of trading. It's not that they don't have any risks in themselves based on the aspect that you're working with a leverage and so on and so forth, but a leverage product, which is to some extent honest, because you are not dependent on an expiration date. In this case, once the trade has to show a result, can massively impact your overall performance. This is also something you should take into account when you focus on which products you plan to trade. Then also, some people, like in the morning, I was asked from someone, hey, how do you scalp NVIDIA today? So I also mentioned NVIDIA, and after talking NVIDIA here, was like someone came up and said, hey, I want to scalp this. So I didn't go into detail here, but this is very interesting because first of all, it's somewhat a combination of the third and the fourth bullet point. So which trading approach do you plan to trade? So first of all, in my case, it's most of the time a combination of breakout trading and trend trading in this case. But there might be other approaches, like you want to be a breaking news trader, for example. But therefore, you have to be the guy. You really have to be capable of executing very quickly, and also, for example, work with technical approaches here in this case, so that you're getting you get some kind of a let's say expert advisor or something being triggered, and then showing some kind of a pop-up in your trading platform, then that this stock or currency pair or index or whatever is now fulfilling the criteria for a breaking news trade, whatever news might be. Then you have to have access to the news feed, which tells you which news just was released, and then take a decision. You have to be a really quick thinker, and then executing on the gained knowledge here on the trade. So that being said, already shows that you have to be a certain character, certain kind of trader in this case, and in addition to that, not just only that, but also that you have to make sure that you have the overall environment so that you can perform at your highest possible level from a technical perspective, for example. Also, there's some kind of, let's call it cognitive strength. So when I talk about who am I know that I'm someone who can execute quickly and think quickly, but I have to be really in my zone for that. So if I didn't sleep well, or if I'm somehow distressed or not relaxed or not fully focused, I'm not the guy who can scalp the market and go in and out quickly, respectively, use all the information I'm getting out of my trading, respectively, out of the market, then to perform at a level which is necessary to scalp well, let's say. So that means when we look at how which time frame we plan to trade, it has to correspond with our personality. In addition to that, it has to correspond with our overall life. So it means if I'm, let's say, working full-time as an employee, but still want to trade the markets, and probably, I don't know, trade once a day, or there's one trade each day, 1-2 trades each week or something like that. It should be clear that even if I'm probably fascinated by scalping the markets or intraday trading, that my overall situation in terms of work does not allow me to sit in front of the screen all day long, be fully focused, and intraday trade the market. So which means I have to make sure that I answer the question, who am I? In terms of what do I need to make sure to make ends meet, let's say, and get money on the account to pay the bills, and then have to see, okay, how can I let my trading correspond with this overall living situation, and then take it from there, which could result in you taking only trades on a daily time frame after you get a certain signal being created here in this case. Then you have to certainly have a trading logic here in this case. We will go through one for gold in the next slide. And then the next question from there is, how does the backtest look like? So you've answered all these questions, you have the trading logic, then you see, does it work? Did it work in the past? Will it likely work in the future? And then you take it from there. The conclusions then in the last step here, which you can draw out of your first backtest, are mainly then directly guiding you on how much risk you, for example, are willing to take. So you can take the backtest result, then the hit rate after you formulated your hypothesis, and then you can say, well, the max drawdown, thanks to let's say Monte Carlo simulation or something like that. Let's say the max drawdown when risking 1% of my equity here on this approach is something like, I don't know, 35%. And you're saying, well, this is a little too much. I'm not willing to take that much risk here. You have to reduce the position size in this case and cut it in half, for example, which could then help you to say, if I'm risking only 0.5% with this approach, this could leave me with a strategy which is drawing down maximum here less than 20%, somewhere in between 15 to 20%. And this is something I could work with. I could handle the stress when I face a drawdown, and then take this strategy as it is, risking 0.5% of my trading capital, and then take it from there. But this is the last step after you went through all these questions and after you've seen, thanks to a backtest, how the strategy performed in the past. So, and this is now the gold strategy, where we won't go through all these questions here in this case. So it's a very simple strategy. It's a strategy where we buy gold every Thursday at into the closing price then on London, and then we sell the position Friday here, the same, or the day after. It's an idea which goes into market participants over the day of Friday, potentially hedging their exposure over weekend, which is probably also about what we could get to see now with the Easter weekend, and you might now wonder, okay, no stop loss, no take profit. Obviously, this needs adaptation in terms of here not being a victim of a massive flush out. But you might probably wonder if this is really working. And you can't really imagine that the strategy is working, but it does. So here is a back test here. From January 2003 till February 2020, you have 888 trades. You have a hit rate of 57. It still works, by the way. So this is just a screenshot I took to give an example here. You have a hit rate of 57%, loss rate here in this case of 43%, payoff ratio of 101 in this case, so a 1.121, and a max DD of 18.6, and this is the equity curve you get. So no one really believes that this strategy is going to work. This is a strategy I ran through Python here, so and you can do it yourself. So this is all you need. Just get data and then run the backtest. You will see that this really works. This is the backtest result. So to get this strategy here, what I did is I went through the questions and answered them for me. So first of all, I said, well, I want to trade commodities in this case because of high liquidity aspects in this case, because of especially trend stability, yields, correspondence, let's say. So that's a market I like to trade. Then there's also, in addition to that, there's lots of information around this. So it's not kind of a, let's say, a penny stock where I have to really analyze, respectively, go deep into some kind of research or something like that. But it's something I get information nearly on all solid platforms. For example, here in Germany, Admiral Markets is offering a gold analysis every week, for example. So you get access quickly to very good solid research. So this is the first thing why I want to trade commodities / in this case precious metals and then gold. And then which product do I plan to trade? Well, I plan to trade CFDs in this case because of the honesty, let's say. It's fully transparent in this case, so there's no need for me to think about an expiration date or something like is the price fair in terms of foreign options or something like that. But it's just like that I say, well, I have a scalable product here, which is fully transparent in terms of the pricing I get there. The reference market is the future market. So that's why I want to trade it with the CFD. It's in this case, which trading approach is it? I'd say it's kind of a it's kind of a news to sentiment based trade. So most of the time it's in direction of the overall. No, it's not really a trend trade. No. We have to skip this probably in terms of a trend trade, but it's like a trade which is based on sentiment. Probably this is probably a sentiment trade. The most likely way to put it. What's very interesting is it's a strategy which obviously only needs you once, or probably twice, when you enter the market, when you exit the position. In this case, it's on a daily time frame. You can easily trade this if you're employed person in this case, so you don't need to sit in front of the screen all day long. Really great, I think. So it's not just for intraday traders, but also especially for those having a 9-to-5 job in this case. The trading logic can be found here. So this is what we do. We don't do anything more. Again, stop loss placement needs adaptation in terms of take profit. Well, we could probably just leave it out, but there needs to be some kind of risk management component being introduced here. And then, well, we run the backtest, and this is the backtest result we get. So it looks promising. So why not? You get this data here. So this is what you get with 1% risk. In this case, respectively, in terms of drawdown. In terms of drawdown, once you trade one contract in this case, and then you can work with these components here, run a Monte Carlo simulation, for example, and then see what max DD do you get after a certain period of running certain backtests, and then decide, is this okay for you? Is this fine for you? Isn't it? And then then hopefully, or not hopefully, but find a position size, a risk per trade you're willing to trade in terms of percentage of your trading capital, so that you can then take the strategy and make it yourself, make it your own strategy in this case. So that brings us, in fact, to the summary for today. Trading system, what is it? It describes how you will enter and exit trades, how your risk money management looks like, describes which logic your trading follows. It's not a trading plan. Trading plan defines what you have to do, why and how, but not only in terms of the trading system and the parameters you follow, but also in terms of your daily trading routine, or your daily routine in general, to get to your zone, to stay in your zone, what which people you have to talk to, what you have to do in terms of making your family happy, your wife, your kids, whatever it might be. It all affects your overall performance in this case. And this has to be clearly formulated in here, so that it's possible to perform at your highest possible level. And in case of now the trading strategy, I just try to guide you through which steps you have to take, respectively, which questions you have to answer for yourself. It's very individually, but where you have a starting point then to formulate here your trading strategy. That's probably the most common question everywhere. So usually people come and say, hey, how can I find my own trading strategy? You have one. Yes, I have one, but I answered these questions for myself, formulating a trading strategy, and I'm completely different than you are. I might be completely fine with the strategy, might perform extraordinarily well. You trade the strategy and just bust your account, and the other way around. And that's why it's important to find your strategy and make the strategy yourself you're planning to trade. And these questions are: which market do you plan to trade? Which products do you plan to trade? And also, which trading approach do you plan to trade? Which time frame do you plan to trade? And what does your trading logic looks like? Then the first results of your back test, how does it look like? And then which conclusions can you draw out of your first back test in this context? And yeah, that's it. So here are the contact details from Admiral Markets. If you have questions, if you have I don't know, ideas for upcoming webinars, please feel free to share them, not just below the video after you subscribed and left a thumb up here if you like what you just witnessed, but also if you want to directly reach out to Admirals, please feel free to do that. Again, fully regulated broker. That's why we have to finish here with a risk disclaimer. Please read it carefully. Be aware of the risks involved when trading the markets. And we talk again next week on Friday. I wish you a happy Easter. May the trading gods be with you. Happy trading. And again, next week on Friday, we talk again. I really look forward to it. See you. Bye-bye.